Good morning, trading world. We have a big day of trade ahead. First, reports that we have to maneuver around today are at 8:30 a.m. and that is the unemployment claims, Philly Fed manufacturing index. Then at 10 a.m., existing home sales and natural gas storage at 10:30 a.m. We also have a bit of Fed speak scattered through the lunchtime period, which I'm sure is going to probably drive price action a little cuckoo during that time period. One of the things that I was looking for this week was a touch of the weekly market makers expected move in that upper edge, and I still think we do so. Just right now, since we're halfway there, things look a little bit too easy, and I expect some difficulties to approach today to kind of knock us back and make it look a little harder than it actually is. The title for today's pre-market outlook was Implied Volatility Smile says we will see some big swings on both sides. I want to touch on that for just a second. Let me bring up an options chain here. All right. One of the big things that I noticed this morning was the implied volatility skew smile. And basically what that is, you're looking at implied volatility here, and on most days like this, I'll usually look at the put side, and we have what's called a smile. As you see at the money, the implied volatility is lower at the money but higher on the further you go out of the money on both sides. We get up to 50% or 60% here and higher, and then down here we get 60, 70, 80% here. And what that tells me is that we're in store for some big swings. It means implied volatility is preparing us to not only trade here at the money, but to also go on both sides. What it's actually saying is, I don't know where trade is going, so be prepared to swing big on both sides. That's exactly what the implied vol is telling you today. When you see something like that, it makes it hard to trade options, especially on an intraday basis, because that implied volatility and the volatility usually pumps a lot of juice into the premiums. And in doing so, the way it's set up today, that any move within this area, it kind of puts the options in like a suspended animation, and you can see some decent sized swings here, but option prices won't move very much, and that's because the added pump in implied volatility. Now, to combat that, what I recommend is using vertical spreads that kind of neutralize some of that implied volatility. And I'm not going to go too deep into it, but a vertical spread, you're basically buying one option strike price and selling another in the same expiration. And what that does is kind of neutralize that implied volatility. Now, also, since I am expecting us to touch the upper edge of the weekly market maker's expected move, another thing that becomes really handy at this time are butterflies. Using a butterfly to kind of take a swing on where you think the ride may end at expiration. And so for me, since I'm looking at or have started the week thinking that we touched the upper edge of the weekly market maker's expected move, for me, that's going to be putting the middle of the butterfly at 594 or 595 on the SPY. And usually, last I checked, you're risking about $15 to make close to 185 if it lands there at the close. If you're thinking that we end up at the lower edge of the weekly market maker's expected move, then the middle of your butterfly would be about 575. But that's just what I'm thinking and what I'll probably end up doing today. One of the executions I'll probably do at some point today. All right, I'm going to do something I don't do very often, which I plan to start doing a little bit more. I'm going to give or do the video on the SPY. I want to touch on what price action is likely to look like today. In today's session, again, this purple line, 595.58, that's actually the upper edge of the weekly market maker's expected move for the SPY. And these yellow lines are basically what I'm going to call the critical areas for today. That first critical area today, the upper edge of that is going to be 593.88, and the lower edge is 590.34. And crossing above this white line, 592.11, kind of gives us credence of what's happening at the moment. And staying above that line a good portion of the day kind of tells us whether we are likely to go higher, whether today or tomorrow, or staying below, likely to head lower today or tomorrow. And today we're going to see a lot of consolidation. We have a lot of overhead supply in this area, and that's going to cause us to kind of chop back and forth a good portion of the day in this critical area. And because of that volatility smile that I talked about earlier, it's not going to last all day, the consolidation in this range. At some point, we're going to get a dropout where we're going to build up to it, but it's going to seem like it came out of nowhere, but we're going to get a big spike down, and then consolidation a bit, and then probably even another spike down. And as the day goes on, we'll consolidate somewhere in here, and you'll see a spike up and then another spike down. The spikes will get bigger as the day goes on. And because implied volatility has no idea where we're going to end up, it's making it hard for you to profit option wise at any time if you try to put on positions today during this during these spikes. you literally have to catch the peak and exit at the very bottom in order to see a decent profit, because that implied volatility is going to pump and suspend how those option premiums move. But again, like I say, the best way to play it is to use vertical spreads. And then the big thing that I'm going to do, since I'm betting that we end up at this upper edge tomorrow when the ride closes, I'm going to place some butterfly spreads at that level today, looking for a close there tomorrow. So I hope that helps. If you follow me and you're looking for the levels on the actual futures, the E-mini futures, I'll put those below. And hopefully soon I will have the website up and membership up and running, so that you will be able to get those levels for each product that we trade, which mainly right now the SPY, the E-mini futures, and the NASDAQ futures. So definitely stay in touch. Visit the website. Go ahead and put your contact information in so I can have your information and let you know when everything is up and running. But as far as today, I hope this helps. And like I always say, remember, your most important job as a trader is to protect the capital you already have. You do this by knowing and understanding the risks you face in each position and in current market conditions. We manage that risk in accordance with our account size. I hope this helps. Wishing you a positive trading day. Let's make it a great one.